Today we're diving into Super Microcomputer Incorporated, SMCI. What moved the stock today, what the technicals and balance sheet numbers are trying to tell us, and why an insider sale plus a big investor trimming a position doesn't have to be a horror movie for shareholders. Quick snapshot, the facts. Shares opened at $44.90 on Thursday. That's the price the market agreed on right as trading began. The 50-day moving average sits near $47.77, while the 200-day moving average is around $42.18. Those moving averages are like the short-term and long-term patrol dogs of price action. SMCI's market cap is roughly $26.66 to $26.68 billion. That's how much the market values all of the company's shares together. On the balance sheet, debt to equity is almost equal to 0.74, moderate leverage, current ratio is almost equal to 5.25, very strong liquidity. The company last released quarterly results on Tuesday, August 5, 2025. That update included the quarter's numbers and guidance commentary. Gateway Investment Advisors LLC recently lowered its position in SMCI, a material reduction disclosed to the SEC. Alright, now let's make sense of those numbers. Why the open price matters, and why $44.90 is more than just a number. An opening price is the market's first impression at the day's dawn. Opening at $44.90 means buyers and sellers met there when the market swung its doors open. It's like the first customers waiting at a bakery. That first sale sets the tone for the rest of the morning. Is it a quiet Tuesday or a Black Friday? Because SMCI had recently been trading both above and below the mid-$40s, this open tells us the market was roughly ambivalent at first light, not euphoric and not panicking. That's important because later intraday moves will either confirm momentum or spit it out. Moving averages, short-term grumbles versus long-term faith. Think of the 50-day moving average, $47.77, as the stock's short-term mood ring, and the 200-day moving average, $42.18, as its long-term fitness tracker. Price below the 50-day but above the 200-day equals short-term weakness but long-term uptrend. That's the current setup. The market is saying, the sprint could be slow, but the marathon's still on. Technically, traders prefer the stock to be above both to call it outright bullish, but being above the 200 helps a lot. It means the broader trend over the past year is up. Imagine SMCI is a runner. The 200-day is a training coach saying, you've been consistently training all year, solid base. The 50-day is the guy at the track saying, your last 5 workouts were sloppy. Which do you listen to? Ideally both, but if you must choose, long-term training wins endurance races. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Balance sheet quick check, debt 0.74, current ratio 5.25, is SMCI solvent or living on credit cards? Short answer, healthy-ish. Debt to equity 0.74, for a hardware company that needs factories, inventory, and working capital, this is a moderate level of leverage. It means the company has 74 cents of debt for every $1 of equity. Not zero, but not, we're building an Eiffel Tower of debt. Current ratio 5.25, this is the hero stat. It means short-term assets, cash, receivables, inventory, are 5.25 times short-term liabilities. In plain English, the company could pay its short bills 5 times over. That's liquidity that would make a banker smile. If SMCI were a household, debt to equity 0.74 is like having a mortgage but also quite a lot of house equity. Current ratio 5.25 is like having a pantry stocked with 5 months' worth of groceries. You could survive a supply chain hiccup or two. Caveat, high current ratios can also mean too much inventory piling up, and in hardware, inventory sitting around can get stale fast. So you still want to watch inventory turns and receivables days. Earnings on August 5th, why that date still matters. Smci reported quarterly results and guidance on August 5, 2025. Earnings events influence sentiment for weeks. Numbers, guidance, and management commentary create the map investors follow. If a company reports weaker margins or guidance changes, and Smci did show margin pressures in recent quarters, the market often flips from buy to quickly. Conversely, a strong guidance can create multi-week rallies, especially in AI/server hardware where big customer wins, like ramping NVIDIA shipments, can change analyst forecasts. Analogy: the earnings call is like the company's report card on the season. The market is the parent who either posts it on the fridge or hides it in the sock drawer. Insider sale: CFO sold 25,000 shares on September 15. Should you panic? Let's be blunt, insiders selling shares makes headlines, but context matters. The CFO sold 25,000 shares on September 15 under a Rule 10b5-1 trading plan. That's a pre-planned program allowing executives to sell at scheduled times to avoid accusations of trading on non-public information. He exercised options at a low strike and sold the resulting shares, netting roughly $1.12 million. He still retains significant ownership after the sale. Why that's not necessarily catastrophic. 10b5-1 plans are common. Executives drip out shares for diversification, taxes, or to buy a house that's suspiciously bigger than their bonus. The CFO still holds a lot of shares. He didn't sell the farm. That signals continued alignment with shareholders. Imagine the CFO as the captain of a ship who sells some extra life jackets to renovate his backyard deck. He still owns the ship, just with fewer spare jackets. When to worry: large, repeated insider selling not covered by planned programs can be tilting. Or if the selling coincides with private bad news. None of that necessarily applies here. The 10b5-1 plan suggests prearranged sales. Big investor trimming a position, Gateway lowers by 22.2%, what that signals. When an institutional investor like Gateway trims a stake by a material percent, the filings show a position reduction 22.2%, it raises questions: did they need cash? Rebalance portfolios? Or did their thesis change? Key points: institutions manage many portfolios and often rebalance for unrelated reasons: liquidity needs, redemptions, model changes. A sell doesn't always equal a loss of faith. However, when multiple institutions are simultaneously trimming, it can amplify selling pressure and worsen sentiment. Imagine a group of group buy shoppers at a market. If one leaves the queue carrying fewer pumpkins, the price may wobble, but one shopper leaving rarely kills the festival. Don't overreact to one fund's reduction. Instead, watch the trend of institutional flows and whether analysts update models. Putting it all together, what this means for investors. Let's translate data into decision patterns. Technical setup: price under the 50-day but above the 200-day suggests short-term caution but long-term growth. If the stock reclaims the 50-day convincingly with volume, that's a bullish signal. If it falls below the 200-day, the broader trend could be at risk. Fundamentals: the company has moderate leverage and very healthy short-term liquidity. That buffers against hiccups, but don't ignore margins and working capital dynamics. Hardware makers can see margins compress when competition heats up. Insider and institutional moves: the CFO's sale was under a 10b5-1 plan and he still owns lots of shares, not an automatic red flag. Gateway's trimming is a data point to monitor but not a verdict. Catalysts to watch: new product rollouts, volume shipments of next-gen AI systems, e.g., Blackwell/other NVIDIA platforms, further earnings/guidance updates, and macro demand for AI data centers. Positive catalysts can overwhelm short-term selling, negative guidance can accelerate declines. Risk checklist: quick, use before you sleep. Customer concentration: does a few big customers make up a large portion of sales? If yes, losing one is painful. Margin trajectory: falling gross margins are a danger sign. Management must prove it can stabilize margins. Inventory/receivables. High current ratio is good, but bloated inventory can become a costly paperweight. Funding needs. They raised convertible bonds earlier, watch how they use that capital. Market rotation. Smci is sensitive to AI/infra sentiment. Sector money flows can be cruel and sudden. Note this as well. And he shewed me a pure river of water of life, clear as crystal, proceeding out of the throne of God and of the Lamb. In the midst of the street of it, and on either side of the river, was there the tree of life, which bare 12 manner of fruits, and yielded her fruit every month, and the leaves of the tree were for the healing of the nations. And there shall be no more curse, but the throne of God and of the Lamb shall be in it, and his servants shall serve him, and they shall see his face, and his name shall be in their foreheads. And there shall be no night there, and they need no candle, neither light of the sun, for the Lord God giveth them light, and they shall reign for ever and ever. And he said unto me, These sayings are faithful and true, and the Lord God of the holy prophets sent his angel to shew unto his servants the things which must shortly be done. Revelation 22 verses 1-6. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.